Good morning, everyone. This is Daily Trading Analysis with the weekly recap for the second week of December, the week of from the 11th to the 15th of December. This week it's also packed with information in terms of fundamental analysis and also technical analysis because we have continuation to the upside following the rally that it's been producing from the small caps through the Nasdaq to basically broadening towards all the US market. And we are going to cover, as always, in this weekly recap from the fundamental analysis to the technical analysis from top to bottom, from the weekly, and going through all the individual stocks and other markets to find correlations and an edge for preparing to next week. First, fundamental analysis. On Monday, we got nothing. The only thing interesting was the 10-year note action that came basically 30 basis points lower from 4.5 to 4.3. And we are seeing all these yields and all these actions going lower from the previous to the actual. Obviously, interest rates are going lower, so these auctions are showing lower interest rates and lower yields. On Tuesday, the big number, CPI data. And I think this is pretty decent news. We are still seeing progress to the downside, and we are meeting Wall Street expectations. In terms of general CPI inflation, month over month, 0.1, a little bit of uptick. We were expecting flat, same as the previous one. And year over year, we got, as expected, 3.1, a little bit of decrease from the 3.2, but 3.1 was the consensus. In terms of core data, core inflation rate, month over month, we got 0.3, a little bit of an uptick. We were expecting exactly that. And year over year, 4%. It's actually the one of the previous one and also the consensus. So this is basically mostly a tick, but as I cover on Tuesday's video, if you didn't check that out, please check that out because I cover in detail all the inflation report. But to highlight, I would like to highlight that inflation is going down basically because fuels are being destroyed, but there are at this core inflation rate, there's also an outlier. Services is the one that is still going higher. Shelter and all that stuff, it's going higher, and Fed is looking these services. So be careful with that, because if we don't see progress and cooling down on that part of the core inflation, Fed might be a little bit more nervous. Wednesday, we got also the PPI. So PPI came basically as expected, still showing signs of the producer side cooling down. 0% on the month over month, 0 and 2% on the core PPI. That's lower than the expectations. And this is really an uptick. We started to see the market continuing its rally with the PPI on Wednesday. And look at this, excluding food, energy, and trade, month over month, 0.1 and 2.5 year over year. And year over year, it's 0.9, lower than the 1%. So really good news on PPI on Wednesday. But on Wednesday, the most interesting thing was the Fed interest rate decisions. We were flat as expected. And if we check the FOMC FedWatch tool, I covered the detail on the statements from Jerome Powell on that Wednesday's videos. Please check that out if you want all the details. But right now, today, in the weekend, as you can see, we have aggressive interest rates cuts throughout all 2024. From 5.25, that is going to be flat on January, we start cutting and cutting and cutting and cutting all the way down to 3.75. Each FOMC, it's being predicted as a cut. So pretty aggressive interest rate cut path moving forward from the analysts and from the market. And if this is not happening, you know what happens when the expectations are not met, right? I think we are too confident on these interest rate cuts. Maybe the market is going too much ahead of themselves. Thursday, retail sales. And here is on Thursdays when things start to go south. Look at these retail sales, 0.3%. We were expecting negative. So retail sales came way higher than expected, from negative to positive 0.3, showing signs the consumer spending is really strong and the retail sales are pushing higher. I think this was a miss. We got a really pullback Thursday, and I think it was going to have big continuation to the downside. But on Friday, remember that we got on Friday in terms of fundamental data, we got in industrial production and manufacturing production, and the estimate from the S&P Global Services and Manufacturing. So basically, production and year over year, it's going lower, negative. That's good for inflation, not for recession. But services continue moving higher on the S&P Global Services PMI. We were expecting 50 and we got 51.3. Again, services is the outlier here. The important thing was the options expiration. Quadruple witching day was this Friday. 3.8 million. It was almost 5 million, but right now on a weekend, it decreased way lower throughout the day. So millions of options expiring on Friday, trillions of dollars. And we were at that point, we were 460 on the price, and we got a max pain of 472. That's why I was expecting a little bit of increase, higher pricing, and then a close lower on Friday. That was my expectations. And we are going to see that on the charts, because I think we got exactly that, and the move was it was not as strong as I was expected, but a lot of people got fake out. I'm pretty sure. Let's start with the technical analysis on the Nasdaq weekly chart. Look at this weekly, pretty strong, closing at the highs. And we took this high and we are moving higher after the weekly fair value gap got a nice dip and then moving higher. I'm expecting continuation to the upside next week. So on the daily, we can see that we took, this is the March contract. If we take the NQ continuous chart, we have this 16,767 that I got here on the Nasdaq. So this liquidity up here was the highs on the continuous chart, and we took that on Wednesday. So we start the week with this liquidity being taken, and look at this move. I mean, straight up. The only day that we didn't have a big day to the upside was on Thursday, with the pullback due to retail sales being so strong. So let's go down to the 4-hour chart. So this was the fair value gap on the daily that we got. We got the push, we got the pullback, and here it was the Friday. So the Friday was the key to really understand if we were going to manipulate lower or hold those levels. As you can see in the 4-hour, we have an inside day. We took these highs and we took the lows. So we are holding, in this case, the 4-hour fair value gap. We are holding this structure. And the issue here is that we have a lot of, let's put the 30-minute chart. We have a lot of inefficiencies lower. We never pulled back throughout all the week to really have these inefficiencies solved and addressed. So the only thing that we pulled back is on Thursday. We got this, I was saying on Wednesday, If we hold this 30-minute and 1 hour chart, you can see that on my videos, we are going to see continuation. So that's what exactly happened. We got a nice big dip. People were super scared down here, but I was watching this for a trade. I didn't trade, but this was a nice opportunity to really finish Thursday a little bit higher and then seeing the continuation in pre-market. So what happened on Friday, it's obviously quite difficult to trade due to the big manipulations, but this was the action during overnight and pre-market, just grinding higher towards this liquidity. So what we did, we basically did what Wall Street always does, faking out people. Look at this. We pulled back before the open, we start grinding up, and we took this liquidity up here. Then we rally lower, and that's when you know that they are shaking out all people, shorts and longs. So we took this out pretty move lower, pretty aggressive. I think a lot of people got trapped down here being short, and I was expecting exactly this. Look at this trade. Rejection lower. I would like, we didn't take this low. This would have been a way better long and more confident one if we took this, but we never did. But look at the move. Look at the displacement that they did. So big displacement, watching the pullback, having this fair value gap on the 1 minute. This is a 1 minute chart. This is the order block. And I took the trade on the close of this candle with the stop on this week. So this is a 3.38 and the risk is already set. This is a 26-point risk. And where is my target? Remember the levels that I showed you this morning previously? These were basically these levels. So from these levels, I had all day, given that the options expirations were higher, was 472. So I was expecting a move higher. So my target initially was this one. We didn't take that one. I moved my stop. I trailed my stop. I trailed my stop here within these two fair value gaps that were being respected. So I trailed basically here. We got the pullback, and then finally we went straight to those. So that was a 89 points long and basically 2 hours and a half, more or less. I was just super confident on this. And then we got this. We got the same structure. We took the highs, big displacement, market structure change on this, leaving two fair value gaps, inverted fair value gaps, and look at this, being respected. And I took the short on the low of this candle. Pretty bad entry. I would like for it to be at least right here, but I didn't have this candle, so, or even this entry, but I didn't want to miss that short, because if we were to go higher on options expirations, we were supposed to do this through this liquidity. But look at this perfection. So I just wanted, this was just one contract. I just wanted to jump on the train, 24 risk, and I didn't expect to go all the way low. So I had this week here through all these two fair value gaps that were respected previously. So basically, entry here 2.24, and the target is 53 points below down here, and we got it here. And then finally it continued lower, but I mean, at this hour, having a 90 points long and a 53 points long, that's a 140 points for a Friday in options expirations. That's almost $3,000. I don't have any necessity to continue trading on a Friday with all that risk. I'm all set. So these were my two setups. Pretty choppy price action, but really, I think we could read really good, really well the price action, even though the choppiness was all around the place. So now that we covered the Nasdaq, let's do a quick review of the individual tech stocks because they are the key to understand what is happening on the US market, on the entire US market. Look at Apple, new all-time highs, and now it's quite doubting up here, quite uncertain. So we couldn't go again through and have continuation through all-time highs above 200. So I think there's a bunch of shorts here. So let's see what Apple wants to do. We have a mini gap here, and I expecting a little bit of pullback and then finish the year strong. Microsoft, really frustrating. Really frustrating. All these grind higher to mark a new all-time high and then big pullback. So we are now again in this range. So we tried to close higher above this line, but we couldn't. So now we are below the purple line and having a nice structure. I'm expecting Microsoft to go lower, honestly. Tesla, big push to the upside, a lot of news on the Tesla side. And I'm expecting Tesla to just go and call for this gap to be filled. So I'm expecting strength from Tesla. Amazon, a lot of this was the Thursday on the retail sales number, bad number for Amazon, retail and consumer discretionary stock. So this was quite a pullback. And then look at this reclaim. So I'm expecting, as long as we have good numbers on Christmas holidays, I'm expecting Amazon to continue grinding higher. So that's my forecast. For Google, we have a little bit of weakness from the AI world. It's trying to fill this gap slowly but surely, but it's quite choppy. Look at these buyers. So we tried to go in this range when we got rejected. So I'm expecting more consolidation for Google. Nvidia coming from a big pullback and now reclaiming this is quite strong. It closed above this level and we have this candle that basically we need to close below or above. We are now in this range, so in this range is just chop and chop and chop. Either we go lower and we continue having this would be a lower high, or we just move higher and we destroy all shorts with new all-time highs. So Meta is in the middle of this range, so I wouldn't touch anything in here. It's coming to the top, but I want this structure to be taken and going through 350. 350 I think is the long-term target for a lot of investors, but I don't know. So why are all these stocks so important? Individual tech stocks, the Nasdaq tech stocks are pulling back a bit. They are not super strong. So what is strong in this market to really show you why we are rallying so much? This is the RSP, the S&P 500 equal weighted ETF. And look at this, because we went from lows of the year to highs of the year. This is a massive move. And this is the equal weighted ETF. So if we check the price range, not only the price range, the price and date. So we went from 18% range from bottom to top in 49 days. And this is caused basically because small caps are doing exactly that. Look at this. We got the low. I highlighted this low in my video. Please check that out because I told you, you have to invest in Russell stocks. because we are at the lows, a low not being seen since 2022, October. And look at this massive move. Again, from lows of the year to highs of the year. And this is a massive move. This was at 21 something, 23% in 48 days. So small caps they are basically carrying the market because investors said, okay, the Magnificent Seven are too overbought. Let's spread our investments to broaden the market. So this rally is really broad. The breadth on this market, it's really the key thing that you have to understand. From 23% of stocks above the 200-day moving average to 60 plus. So this is something that you have to be aware, because if you've traded Nasdaq, maybe you are not seeing this, but the US market is super hot. US market and small caps are pushing the S&P 500 to new highs, and Nasdaq is benefiting from that, but it's not super strong due to Apple and all that. They are strong. Microsoft, Google, Amazon, Tesla, Apple, all those Magnificent Seven are strong, but the real strength is coming from the small cap world. And you can see that in the equal weighted ETF and also on the percentage of stocks that are pushing higher. Investors are opening their investments and are broadening the bull rally that is happening. Last thing, dollar. We are seeing more and more weakness, but be careful with this level, because I think we saw a big retracement on Friday. If we check the 30-minute chart, we can see this structure being formed. And if we have strong dollar next week, we might not see the strong continuation that we are looking for on the Nasdaq world. I'm expecting more continuation to the upside due to we have this inside day on the range on Friday, and we are respecting these fair value gaps from Thursday. We pull back and we jump straight out of these gaps. So I'm expecting continuation higher, but something that needs to happen is that dollar needs to continue seeing weakness. If not, I will just be super picky on taking longs. And I think that's all. We covered a lot of things. And I think we are prepared for next week. So be careful with your expectations. If we pull back, just look for those opportunities of the lows on key structures for fair value gaps. There are a lot of them down here. So just see what is respected. But at some point, I think in order to be efficient to the upside, we have to retest those. So if we start on Monday seeing a lot of pressure up here and we go through these gaps, we might see a week of revisiting these inefficiencies in order to solve them. So be careful with the longs in that case. And that's all from my side. As always, thank you for your time. If you found these weekly recap videos interesting and useful for you, please give them a like, subscribe to the channel. I upload this kind of weekly recaps every Saturday to review the week, to prepare for next week. And also, I upload videos every single trading day for market forecasts, market updates, and market recaps. So thank you for your time. I hope you had an amazing trading day. It was a really nice week for bulls. So if you got profits, enjoy with your family, enjoy the weekend. And remember that discipline and risk management are the key on this business. Stay safe, everyone. Enjoy your weekend and see you on Monday.